Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live throughout the day from the 44th Annual Futures Industry Association Conference. Joining me for this segment, we have Andy Ross, who's the CEO of Curve Global. We're going to focus on the future of the global futures market. Andy, it's great to have you back on
Jill,
set with us. You got it. And what's interesting, the industry is kind of going through a transition right now, breaking away from traditional vertical silos that exist in futures markets. Tell us more about that.
Well, I kind of think futures markets grew up in coffee shops and then onto trading floors, and then we'll all remember people in pits with bright coloured shirts waving hand signals at each other. And you have these things grow up in very domestic markets. But global markets aren't domestic markets. They aren't currency specific. They aren't location specific. And so what we think is that over time you're going to see markets be broader and offer a plethora of choice. And so actually choice and competition in markets is really good for the end users of markets. And we've seen that in FX, you've seen that in US Treasuries, you've seen that in equities, and so and clearly in examples in listed options. So it's futures that feels like it's the odd man out. And so what Curve is attempting to do is drive some change into that market. All
right, now we can't have this conversation unless we talk about regulatory issues. How has MiFID impacted the futures market?
Well, for me, MiFID is a tailwind. It's driving competition into the market, and there are two principal elements of that. The first is best execution, and people have to have their own best execution policy, and it's not for me to tell anybody what their best execution policy is. But ultimately, looking at different pools of liquidity so that you're making sure you're getting the best price is clearly a responsibility and a fiduciary responsibility of a lot of firms. And so getting best X when you have new exchanges, it's interesting. People have to come and look at you. Mm-hmm. And so that's kind of like and at the Stock Exchange Group, we've been a big proponent of open access, allowing people to choose, allowing competition and choice. And that just, I believe, is a market structure around the world.
Darwinism. So it certainly will weed out the outliers. But there's an upcoming event in terms of benchmark reform. And how is the industry responding to this?
Well, people talk about the world's largest number, and my wife might say that's my waistline, but I think it's the transition to LIBOR, from LIBOR into SOFR, or in UK we have a SONIA, which is a slightly different rate. It's an unsecured rate as opposed to the SOFR rate in the US, which is a secured rate. But you've got these benchmark reforms that are happening. And what you're seeing is a variety of exchange groups, Curve included, offering new products in these reformed rates. And so traditionally, if you think of something like a LIBOR-based product, what you were trading is a product that was trading now, but fixed, and you knew what your payoff was going to be in 3 months' time. But obviously, that was we had a lot of crises of manipulation of those historically. And the benchmarks team at ICE have done a phenomenal job in cleaning that up. But ultimately, people are saying, look, that doesn't trade very much. Those underlying LIBOR things just don't trade in any basis. Meanwhile, say in the sterling market, 50 billion trades of unsecured every single day. So what that means is for your products, you don't have a 3-month forward-looking rate anymore. You'd actually have a daily accruing rate. And so that is brilliant for financial market stability because it's transparent, it's based on real underlying data that's occurring, and it means that people have actually something that's not based on people guessing what the rate is in glass boxes. It's a rate that is accruing on actual things that have occurred in the market.
This transition is happening now.
So one of the things that the stock exchange does is issue bonds. And so we've issued a huge number of SONIA-denominated bonds. I've seen SOFR-denominated bonds. And so within the market, you've got derivatives and futures, you've got derivatives and swaps. And then at LCH, for instance, which clears a huge proportion of the world's swaps, there were more SONIA, this new discounted rate in Europe, there were more SONIA discounted swaps cleared last year than there were LIBOR. Now, clearly, notional is the measure I'm doing that on, is a flawed measure, DV01 or risk. And so on a risk basis, it's more like a third. But that is up 100% over the prior year. So this is a migration that's already occurring, and I believe is only going to continue to occur with issuance, with futures trading, and with swap trading.
All right, Andy, thank you so much for joining us at FIA Boca, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.